Tiny homes versus traditional homes. Which one saves you more money? Did you know the average American homeowner spends over $3,300 a month on housing costs? And that tiny homes and prefab options can slash that figure by 50% or more? Here on Next Gen Living, we dive into the real-world finances of non-traditional homes. Tiny homes, tiny home kits, prefab and modular homes, and ADUs, and compare them to conventional stick-built houses. Today, we'll explore the true cost savings behind each option, along with the hidden expenses and lifestyle trade-offs you need to know. Let's peel back the glossy exterior and see which path can genuinely save you money long-term. Tiny homes. Tiny homes typically cost between $30,000, 0 cents, and $80,000, 0 cents, versus a median $300,000, 0 cents traditional home, making the upfront savings impressive. But remember, you'll still need to budget for land, either buying a plot or paying monthly lot fees, plus utility hookups and insurance, which can eat into those savings. You may need an RV or personal property loan, which often comes with higher interest rates and shorter terms. Resale value can be unpredictable since the tiny home market isn't as established, so treat it as a lifestyle choice, not a guaranteed investment. Still, once you replace a mortgage with a mini mortgage or RV loan payment, the monthly cash flow relief can feel like financial freedom if you're ready to live with less. Tiny home kits. Tiny home kits offer a lower entry point, $20,000, 0 cents to $60,000, 0 cents range, by letting you build much of it yourself, saving on labor costs. However, the clock starts ticking once you begin. You'll need tools, hardware, possibly subcontractors for electrical and plumbing, and that can all add cost. Delays are common too, especially if you're juggling a full-time job, weekends, and permit schedules. Additionally, zoning and inspections still apply and mistakes can be costly, so budget for contingencies. The sweat equity model only works if you truly have the skills and time to build it. For DIYers willing to learn and hustle, the financial benefits can be substantial, but if not, hidden costs can quickly inflate your budget. Prefab homes. Prefab homes are largely built in a factory, reducing construction costs per square foot, typically around $150, 0 cents, compared to $200, 0 cents plus for stick-built. The value here is in the efficiency, no weather delays, less waste, and controlled timelines, which reduce financing costs. However, you'll still incur site prep fees, think foundation, delivery truck, crane, and on-site hookup, which can add tens of thousands to your project. Prefab homes enjoy better resale value than tiny homes thanks to conventional mortgages and consumer familiarity. If you're shopping for a mid-sized home and want to save money without sacrificing quality or resale appeal, a prefab build offers clarity in cost and timing. Modular homes. Modular homes bring a bigger living space, 1,000 to 2,500 square feet, at a built-in factory price, often costing around $180,000, 0 cents, all in including installation for a 1,200 square foot model. You get the perks of reduced waste and fast build times, plus the ability to use conventional mortgages. On-site expenses still apply, foundation, delivery, permits, but overall costs tend to remain controlled. Modular homes often appreciate like traditional builds, making them a smarter investment compared to tiny homes. The downside? Zoning restrictions can apply, and if you're building in a high-cost land area, savings can vanish quickly. But for buyers desiring space, customization, and value retention, modular is a compelling financial choice. ADUs, accessory dwelling units, cost roughly $100,000, 0 cents to $200,000, 0 cents to build, depending on amenities and size, but they can generate steady rental income, often $1,000, 0 cents to $2,000 monthly, depending on the area. Offset your primary mortgage or even create positive cash flow if you're close enough to public transit or city centers. You do need to account for permitting, potential utility upgrades, and design to fit existing structures, plus ongoing maintenance responsibilities. But ADUs often qualify under traditional financing and enjoy property appreciation. For homeowners with available yard space and favorable zoning, ADUs not only save money, they make money. and can also serve multi-generational needs or home operator use with minimal additional cost. Property taxes and insurance. Smaller or non-permanent homes often mean smaller tax bills, which is great for your wallet. A tiny home or ADU assessed at a lower value will typically have significantly lower property taxes compared to a $400,000 zero-cent stick-built home. However, the insurance picture is more complicated. Because many alternative homes don't fit standard classifications, you might need specialty insurance or deal with limited coverage options, especially for mobile units. Modular and prefab homes tend to fare better since they are usually placed on permanent foundations and qualify for standard homeowners policies. Bottom line, you'll likely save on taxes, but shop around for insurance to avoid expensive surprises. Financing options. While traditional homes have countless financing tools available, conventional mortgages, FHA loans, VA loans, non-traditional homes often don't. Tiny homes in particular may not qualify for a mortgage if they're on wheels or lack a permanent foundation. This leaves you with personal loans, which carry higher interest rates and shorter terms. Modular homes and ADUs are more likely to be financeable through regular home loans, which helps reduce your monthly payments and improves overall affordability. Some new lenders are starting to adapt, but for now, access to low-interest funding is still a major barrier for alternative housing seekers. Knowing your loan options in advance is crucial before committing to a non-traditional build. Appreciation and resale value. A traditional home in a strong market tends to appreciate over time, building equity and long-term value. With non-traditional homes, appreciation varies widely. Modular homes and ADUs attached to a primary property often retain and increase value alongside the main home. But tiny homes, especially mobile ones, can depreciate like vehicles, especially if they're not permanently affixed to land. Resale also depends on location, demand, and legal zoning. Buyers are limited to those who want and can legally own such a home. So while you might save up front with an alternative home, think long-term. Is this where you plan to stay, or will resale matter down the line? Lifestyle costs. Living small or differently often comes with lifestyle trade-offs that aren't always reflected in a spreadsheet. In essence, here at Money for the Rest of Us, we think one person marketing me as, yes, you'll save on space and clutter. But that also means fewer guests, less storage, and limited room for hobbies or home offices. For families or people working remotely, these sacrifices can lead to spending more on co-working spaces, storage units, or even travel just to get away from cramped quarters. In contrast, a traditional home can accommodate changes in life like kids, pets, or aging parents. So, your financial savings may be strong in a non-traditional home, but be honest about the day-to-day lifestyle and whether it matches your long-term needs. Mobility and flexibility. One of the often overlooked financial benefits of tiny homes and modular units is mobility. For people who want the freedom to move without starting over, having a home on wheels, or one that can be relocated, saves thousands in moving costs and relocation hassles. Traditional homes lock you into a fixed address and tie your finances to one location. With the housing market becoming increasingly volatile, the ability to move your home to where the jobs or cheaper land is can be a game changer. While the resale market might be smaller, the flexibility to relocate is a form of savings in itself, especially for those chasing seasonal work, remote jobs, or simply a change of scenery. Time to build, time is money, especially in construction. Traditional homes can take 8 to 12 months or more to build, depending on location and contractor availability. In contrast, prefab and modular homes are built in weeks, and tiny homes can sometimes be completed in as little as 60 to 90 days. That means fewer months of paying rent while you wait, less time dealing with banks, and lower interim financing or storage costs. The faster build also means faster move-in, which can be a major advantage if you're leaving a rental, relocating for work, or trying to start a rental property income stream quickly. Faster builds equals quicker returns on your investment. So, what do you think? Could a non-traditional home be your path to financial freedom? Let us know in the comments. Hit that like button if this helped you see the bigger picture, and subscribe for more breakdowns from Next Gen Living, where smart design meets smarter budgets.